Welcome to the deep dive. We're here again to take apart one of those bits of common wisdom, maybe see what's really inside.
Yeah, looking beyond the surface.
Exactly. And today, we're zeroing in on something you hear constantly, right? Everywhere from like sports coaches to business gurus.
Yeah.
Trust the process.
Oh, yeah. That one's huge.
It sounds so simple, so encouraging. Just keep at it, do the thing, and eventually success just happens.
Well, that's kind of the hook, isn't it? But it's also where the danger lies, especially in really high-pressure fields like trading, which is our focus today.
Right. Because the phrase itself, it doesn't really mean anything specific, does it?
Not on its own, no. Its meaning, whether it's, helpful or actually harmful, it's entirely defined by what you do, or crucially, what you don't do.
Okay, so that's our mission for this deep dive then. We need to pull apart that difference. The difference between really trusting a process you've built, tested, put the work into, versus just kind of passively hoping things work out.
Precisely.
Okay.
Because, as our source material today points out, it's this really sharp piece called trusttheprocess.pdf, written by Sir Margin at Como Solutions Pty.
Yeah, really insightful stuff.
It really is. And it warns that this phrase, trust the process, it can be, and I'm quoting here, one of the most powerful yet dangerous mantras going.
Powerful yet dangerous.
Yeah.
Okay, so let's start with the dangerous part. How can something that sounds so, well, positive actually be harmful? The document even calls it the comfort zone of failure. That's quite a statement.
It is, and it flips the usual meaning right away. When trust the process is used negatively, it basically just becomes a cover for, well, doing nothing.
Inaction.
Yeah, pure passivity. It's like you're just sitting back waiting for success to happen to you. Maybe you read a book about trading once, or you backtested a strategy 6 months ago. Now you're just waiting.
Yeah.
You're expecting the market or your project or whatever it is to just magically bend to your will without you actually getting your hands dirty every single day.
Okay, so it becomes less about the work itself and more like, I don't know, an excuse for not seeing results. I've definitely heard people say things like, well, my strategy's been losing money for half a year, but, I just trust the process. Is that the kind of thing we're talking about?
That's spot on. That's the perfect example. It turns into what the source calls a shield against accountability.
Right.
You're basically ignoring the absolutely critical step of asking, hey, is this process I'm supposedly trusting actually any good? Is it flawed?
So you're not trusting a working process. You're just clinging to the idea of one, even when the results are telling you otherwise.
Exactly. You're trusting blindly, not smartly.
And what does this avoidance look like day to day? What are those, the document called them, tedious, non-negotiable tasks that get skipped?
Well, it's the foundational stuff, really. The things that actually make a process work, like daily pre-market analysis, meticulously journaling every single trade, the wins and the losses.
Oh, the journaling. Always the journaling.
Always. And, weekly reviews of your actual metrics, your performance, and just constant study, keeping up, refining things. When trust the process becomes the excuse, all that crucial, sometimes boring, but essential work, it gets thrown out the window.
The author uses a really interesting term for this, spiritual bypassing. How does that fit into trading?
Yeah, it's a great phrase. It basically means using a mindset trick, like this mantra, to dodge the practical nitty-gritty work, the actual execution and refinement.
Okay.
It's like believing that just having the right mindset is enough to make profits appear, without putting in the actual sweat equity. Yeah. You're using the words trust the process to feel good about not doing the process.
Wow. Okay. So this isn't just lazy, it's actively destructive. The source calls this version a death sentence for a trading career.
Stark, isn't it?
It really is. And the antithesis of urgency. It completely kills any drive to improve. So for you listening, maybe pause for a second. Where in your own work, or maybe even like a fitness goal or learning a skill, might you be doing this? Using trust the process as a sort of comfort blanket instead of a driving force. I know I've done it with trying to learn guitar. Just got to trust the process while the guitar gathers dust.
We've all been there, I think.
Definitely. But okay, let's flip this. That's the dark side. How does this same phrase become, as the document puts it, the engine of growth when it's used correctly? It's described as an active faith, but one built on relentless effort and validated experience.
Right, and this is where it gets genuinely powerful. When you truly trust the process the right way, it's all about discipline, specifically discipline over your emotions.
Okay.
It means sticking to your predefined trading plan, your exact rules for getting in, getting out, managing your risk. You stick to those, especially when your gut, your fear, or your greed is screaming at you to do something else.
Ah, so it's about overriding those impulses.
Precisely. The belief, the trust, is that over the long haul, executing your tested edge flawlessly, sticking to the plan, that will lead to results. Even if one particular trade doesn't work out, it's system over impulse.
So consistency is key then, not getting thrown off by market noise or chasing some hot tip.
Absolutely. The document really hammers this home. Profitability comes from repeating high probability actions consistently. It's not about finding the perfect magic bullet or predicting every market turn.
Yeah.
It's about doing the work, taking the setups that meet your criteria, managing the risk, as the author says every single time. That relentless consistency in execution, that's the core of it.
And crucially, this isn't just wishful thinking, right? It's not blind faith like the negative version. It's based on something solid.
Not at all blind. This is what the source calls confidence in a statistical edge, and that confidence is earned. It comes from doing the hard yards of rigorous back testing and forward testing.
So knowing your numbers.
Exactly. Knowing your strategy's win rate, its profit factor, the average size of your wins versus your losses. The author puts it plainly. You trust the process because you have data that shows if you execute it 100 times, you should be profitable. You're trusting the math, the probabilities you've verified, not just some vague hope.
That makes sense.
Yeah.
And that data-driven trust must be incredibly important when things inevitably go wrong.
Right.
During those losing streaks or drawdowns.
Oh, absolutely essential. Because every strategy will have periods where it loses money. That's just statistics.
Right.
This active informed trust is what keeps you from panicking and throwing a perfectly good, proven strategy out the window just because you hit a rough patch.
Yeah.
You don't ditch the plan. You lean on your historical data. You trust the numbers to sort of normalize over a larger sample size. It gives you the resilience to stay the course.
That's a really clear distinction. So again, for you listening, think about your own processes. What kind of data or rigorous testing, even if it's not trading, could you apply? Maybe it's tracking results in your job or measuring progress on a project. How can you build that informed confidence, that active trust? Okay, so we've got the two edges of the sword, the passive hope versus the active data-driven trust. But let's dive deeper into what trust the process really means at its heart for someone who actually lives it successfully. The author gives this fantastic personal definition: the disciplined execution of a statistically validated plan, fueled by relentless preparation and reviewed with brutal honesty.
Yeah, I love that definition.
Me too. And it highlights that it's an active verb, not just a state of being.
Exactly. The author talks about it as this whole ecosystem of success. It's not just one thing, like the strategy alone. It's everything that goes around it. And it starts, crucially, with the preparation process.
And reading the description, this preparation sounds, well, intense. It's not just scanning the headlines before the market opens.
Not even close. The author describes it as, waking up early or staying up all night studying, really digging deep into different trading approaches, thinking about how to incorporate aspects of life or psychology, finding philosophical methods that can give me a competitive edge.
Wow.
Yeah, and understanding the fundamentals, the economic activities of assets, plus all the scanning, filtering, planning trades based on both the micro and macro outlook. So everything from the tiny short-term fluctuations up to the big picture long-term trends, it's incredibly comprehensive.
That's serious dedication. Okay, so after all that prep, then comes the execution process. How is that defined?
This part is about strict discipline. Entering, managing, and exiting trades exactly as indicated by the market with no deviation. No wiggle room based on feelings.
Right.
And a key rule the author mentions is crucial. If the information within the market suggests that I should exit, then first rule is do not, under any circumstance, argue with the market. You listen to the market signals, not your own internal monologue or ego.
Don't fight the tape, as they say.
Pretty much.
Yeah.
And then, tightly linked to execution, is the risk management process. The author has an interesting take on risk here. Doesn't just focus on the money, that's right. Obviously, risking capital is part of trading, it's necessary. But the author defines their real primary risk as time and attention spent on a trade.
Time and attention. Interesting.
Yeah, they say unnecessary risks consist of attention, emotion, time, and anything that takes away my focus from pursuing other asset opportunity cost. So it's about protecting your mental bandwidth, your focus, as much as your capital.
Which leads to a non-negotiable rule, right?
Yes. Not making any executions or engaging in trades with low probabilities. If the odds aren't clearly in your favor, based on your tested process, you just don't engage. You preserve your time, attention, and capital for better opportunities.
Okay, this all builds a picture of intense discipline, but then we get to the review process. And this is where the author offers a really provocative, almost contrarian view, isn't it?
Definitely. This part really challenges the standard advice.
Because the conventional wisdom, what most trading coaches and books tell you, is that you must journal every trade meticulously. Now, ask yourself, why did I take it? Yeah. Did I follow my rules? What did I learn? That whole post-mortem analysis.
Right. And that's seen as essential to validate or invalidate the process you're trying to trust.
Yeah.
For many, especially when starting, it probably is essential.
But the author here says they don't do that kind of journaling anymore, at least not after their first year of intense analysis.
Correct. Their reasoning is fascinating. They believe that reviewing your trades is expecting to play the same opponent again, while in trading, the opponent is always different. They use this great analogy. You cannot step into the same river twice. Neither are you the same person, nor is the water the same. The market conditions, the participants, even you are constantly changing. So looking back at a past trade in detail has limited value for the next unique situation.
That's wider perspective. It really shifts the focus. But hang on, for someone who is still learning, or maybe hasn't solidified their process yet, wouldn't that traditional review be absolutely vital to spot their own recurring mistakes or flaws before they can reliably predict ahead, like the author suggests?
That's a really important point. And yes, I think the author's approach is definitely presented as something for a more advanced stage. After that initial period of deep analysis and rule development where presumably traditional journaling was done.
Okay, so it's not advice for day one?
Probably not. Their alternative for this advanced stage is focused on foresight, not hindsight. They aim to learn to predict few moves ahead and with application of the minimax strategy.
Minimax, like in game theory.
Exactly. They're estimating the market's likely moves before they even execute, assuming the market, the opponent, might make the best possible counter move against them. It's like playing chess, always thinking ahead.
So they operate assuming the market is smarter than them.
Pretty much. They see themselves as the underdog against Goliath, always planning for worst-case scenarios, looking for ways to survive those close, compact situations that are bound to happen.
And if a trade fails?
For them, under this framework, the only logical explanation of failure is simply being inadequate. I was bested by my opponent. The focus shifts immediately to, how do I get better for the next different opponent, rather than dwelling on the specifics of the last loss.
That demands incredible self-awareness and a commitment to constant improvement. So thinking about this whole ecosystem prep, execution, risk, that unique review, how does this apply outside trading? For you listening, what's your opponent in your field? Is it changing market demands, new technologies, internal challenges? And how do you prepare? Are you looking back or are you trying to predict moves ahead?
It's a powerful framework to consider, definitely.
Okay, let's try and pull all these threads together. We've seen the bad trust, the good trust, the ecosystem. What's the ultimate takeaway here about where the focus should be?
I think the document nails it when it says, the sense of urgency is applied to improving and executing the process, not to the outcome of any single trade.
Okay, so the urgency isn't about, I need to make money now on this trade.
No, exactly. That leads to mistakes. The urgency is about the process itself. You need to be urgent in your preparation, urgent in your education, urgent in your review sessions, however you choose to review, and disciplined in your execution. The author calls that discipline a form of urgent patience.
Urgent patience, I like that. It captures that blend of consistent effort and non-attachment to immediate results.
Right. It's a constant active drive to be better at the doing, not just waiting for the getting.
That really reframes it. So the question for you, the listener, becomes, where is your urgency focus right now? Is it all on the outcome, the end goal, the win? Or are you channeling that energy into the daily, diligent, sometimes difficult work of refining and executing your process?
A critical question.
So wrapping up this deep dive, that phrase, trust the process, it's meant to provide calm, right? To be the calm in the storm of the market, as the soul says. But what we've learned today is that calm isn't free. It's not something you get just by saying the words or wishing for it.
Absolutely not. And the core message from Sir Margin's work is crystal clear on this.
Hey.
That calm must be earned every day before the market opens through hard work. It's earned through that whole ecosystem we talked about, the prep, the discipline, the honest review.
It's an active achievement, not a passive state.
Precisely.
And that leads us perfectly to our final provocative thought for you today, drawn directly from the source. It puts it so bluntly, and I think it's worth really sitting with. If you haven't done the work, you are not trusting the process you are hoping. And hope is not a strategy,
Oof. Powerful.
isn't it? So the challenge to you is, take an honest look. In your work, your goals, your life, where are you truly earning your calm through that rigorous daily pregame preparation and execution? And where might that sneaky imposter hope still be masquerading as trusting the process?
Something to really mull over.
Indeed. Thanks for joining us on The Deep Dive.